I haven't written about inflation for 20 years. When I did quarterly letters, I never featured inflation. I didn't think it was on the radar screen. It is now on the radar screen once again. It's not that inflation will go roaring back to 1972 or 1982. It's that it will always be part of the discussion from now on, in my opinion. Instead of forgetting about it, it will be spiking and irritating and falling back and then spiking again. It will be part of the scenery in the way it used to be in the second half of the 20th century. There's a lot about this economy, I think, that will be dragged back into the late 20th century. We've had a very, very abnormal honeymoon Goldilocks period for 20 years, which I think is ending. Let me put it this way. We're in the early stages of running out of raw materials. Of course, we live on a finite planet. There's only a certain amount of cheap oil, cheap nickel, cheap copper, and we're beginning to hit some of those boundaries. And we're going to have bottlenecks here, there, and everywhere. The food price index of the UN is about as high as it gets. Growing food is not getting easier. Climate change is coming with heavy floods, serious droughts, and higher temperatures. None of these make farming easier. So we're going to live in a world of bottlenecks and shortages and price spikes, and we have to get used to it and learn to manage our way around it. And it may well turn out that owning commodities or selected commodities will be something of an escape valve. Commodities have a long history of doing quite well when inflation picks up, for obvious reasons. And inflation is quite likely to pick up. Looking out into the future, it is pretty clear that we are running out of labor. Fertility rates have dropped like a stone. China is reeling from the shock of finding that it has 10.8 million babies last year. It's only the other year, 7 or 8 years ago, it had 20. And this means absolute certainty that the cohorts of 20-year-olds coming into the workforce will be smaller going forward. Everywhere in the developed world, we're below replacement in fertility. I think there's quite a few hedge funds that have a style of making 100 small bets, trading gas prices against diesel prices and Brent oil against Texas oil. They do 1,000 arcane little relationships. They're all independent of the market. If they do it well, they'll make a few percent, maybe even quite a few percent. And there will be some enormous dynamic moves in resources. I think the Fed absolutely does not get the pain that's involved with a bubble breaking. You can see that in the history of the last 50 years. Greenspan encouraged the tech bubble. He bragged about the productivity gains from the internet that would last forever. Actually, productivity has declined slowly but surely since then. When it broke, it caused a lot of pain. Bernanke learned nothing. He encouraged the housing bubble. He denied its existence, even though it was a 3 sigma, 1 in a 100-year event that had never occurred in American history before. And what have we learned? We just went straight back into the game, overstimulating, pushing the rates down and down they have gone for 50 years. So they started at 16% on the long bond, and now the real return you would get is -2. No, he hasn't expressed any reservations about the Greenspan, Bernanke, Yellen, Powell policy of pushing rates down. They act as if a low rate is a panacea and comes with no downside. That is clearly nonsense. It's created, I think, the biggest evil in our society, and that is inequality. If you drive up the price of assets systematically, and it's bound to happen if you drive the rates down to negative territory, who do you make money for? You make money for the people with assets. Who owns the assets? The top 1% has 35% of all the assets. The top 10% have practically all the assets. What's the asset ownership of the bottom half? a rounding error, practically none. So you mark up the assets, and that's your contribution to society. What you're doing is pushing down on labor, pushing down on the bottom half, with no offset from increasing their assets, since they have none. And you're making the top 1% ineffably rich. And the data bears that out right down to the last 2 years, when the top 0.1% has doubled its wealth during COVID. And the bottom 50%, I can assure you, has not doubled its wealth. The dominance of a handful of firms has increased steadily in most subsets. And so profit margins have gone up, and the power of corporations has gone up, and they've been able to use more of their power in influencing government, and they have. There is a lot of regulatory capture where people from business tend to run the agencies that regulate the industries. So it's been a wonderful time to make money at the corporate system, and the share of GDP that goes to corporate profits has steadily risen, and the share going to labor has steadily fallen. This makes it a dreadful cousin with the asset class inflation that we've had. They both have two things in common. They make the rich better off, and they make the working class worse off. And that I think is the great poison at the moment in the American system. If we do not address rising inequality, we will be in real trouble. We are the least equal society, measurably, in the developed world. We have the least fluid economic mobility, for heaven's sake. You know, when I arrived in America in the 60s, it was a joke how rigid the UK was. The UK is now less rigid than the US. The number of people moving from the bottom quarter to the top quarter in a lifetime is half of what it is, say, in the Swedens of the world, in the US. We are the least mobile. I mean, this is so un-American. It is so far from what people believe to be the case. But check it. We're the least mobile, we're the least equal society. And it's a poisonous influence. And we have facilitated it. We have moved the taxes on capital gains tax, dividend tax, interest tax. We've moved them down, and by definition, the amount that has to come from income has gone up. I like to draw a very clear line between venture capital and everything else. Private equity is just another form of money management. You are shuffling the existing pieces of paper around. If you make money, someone else loses. And to do it well is exciting and useful for your clients. From a society's point of view, you don't add a lot of value. Venture capital is completely different. Venture capital facilitates and expands new ideas, innovation, change, all the things that we will need to deal with climate change, to deal with inequality, to deal with future, to deal with progress. You need as many innovations as you can get, and venture capital does that. And America does venture capital very well indeed. It's like many things, it's good and it's bad. The bottom line in climate change in particular is that the sums involved are colossal. Trillions of dollars have to move. And yes, I think there's something to be said for Simon Pure specialists in venture capital who do terrific research and etc. But in the end, we need money. So I welcome the hedge funds. I welcome the new people who make investments very quickly on very light research. And of course, there's a bubble element to all that. And some of it will be priced much more highly in the last few months than it will be sometime in the next couple of years as the bubble fully breaks. But in the end, look back at the Amazons, look back at the internet bubble. There was a lot of money wasted, but my God, it did push along the technologies of the internet. And it was the US who emerged with the Amazons and the etc., the AOLs of that era. I have spent a lot of time in the last year on cryptocurrencies. They may not be good for buying groceries. They may not be a store of value. They may be highly correlated with the speculative stocks. They may have come down 40, 50% like the specs, but they do something way over my head to understand. The question is there a technology, blockchain, that will turn out to be very useful, whether done by corporations and governments and everybody else? I am sure the answer is yes. There's a useful technology, etc., etc. Does this justify trillions of dollars of perceived wealth? No, it doesn't. If they can find a usefulness for it when it's integrated into the economy, it will perhaps facilitate productivity, like many ideas do. Very few ideas of that kind floated around and were capitalized at trillions of dollars, even though they had an enormous impact on the economy. Blockchain should be like one of those. The internet has created enormous value, but it didn't float around internet units which were capitalized and became worth trillions of dollars. And I admire them for not doing that. They deliberately went out of their way to make the internet a facilitator and not a way of amassing money in itself.